Here's a summary of Meta's Q2 2025 earnings call, focusing on key financial metrics, management commentary, and future outlook, suitable for reading aloud. Good afternoon, everyone. Today, we're reviewing Meta's performance for the second quarter of 2025. Key financial highlights. Revenue. Meta reported $47.5 billion in total revenue, a robust 22% increase year over year. This growth was driven by strong performance across the family of apps, which contributed $47.1 billion in revenue, also up 22%. Ad revenue specifically reached $46.6 billion, marking a 21% increase. Profit. The company achieved $18.3 billion in net income, translating to $7.14 per share. Operating income stood at a substantial $20.4 billion, with an operating margin of 43%. Expenses. Total expenses were $27.1 billion, up 12% year over year, primarily due to increased infrastructure costs, R&D investments, and employee compensation, partially offset by lower legal costs. Family of apps. This segment saw revenue climb to $47.1 billion. Ad revenue grew 21%, with online commerce being the largest contributor to year-over-year growth. Impression growth accelerated by 11%, largely due to engagement tailwinds and ad load optimizations. Average ad prices increased by 9%. Other revenue within this segment was up 50% to $583 million, driven by WhatsApp paid messaging and Meta verified subscriptions. Reality Labs. Revenue for Reality Labs was $370 million, a 5% increase, mainly from AI glasses sales, though offset by lower Quest sales. Reality Labs incurred an operating loss of $4.5 billion on $4.9 billion in expenses. Capital expenditures. Meta invested $17 billion in capital expenditures, primarily in servers, data centers, and network infrastructure. Free cash flow. The company generated $8.5 billion in free cash flow. Shareholder returns. Meta repurchased $9.8 billion of its stock and paid $1.3 billion in dividends. Management commentary. Mark Zuckerberg, CEO, highlighted a strong quarter with over 3.4 billion daily active users across its apps. He emphasized the company's significant investments in AI, stating that they are beginning to see improvements in their AI systems, with the ultimate goal of achieving personal superintelligence for everyone. AI vision and strategy. Zuckerberg detailed Meta's commitment to AI, establishing Meta Superintelligence Labs to focus on next-generation models like Llama 4.1 and 4.2. He stressed the importance of building an elite, talent-dense team and providing unparalleled compute power, citing investments in massive compute clusters like Prometheus and Hyperion. Key business opportunities. He outlined 5 key opportunities driven by AI. 1. Improved advertising. AI is unlocking greater efficiency, driving more ad conversions on Instagram and Facebook. Generative AI features are also contributing to ad revenue. 2. More engaging experiences. AI is enhancing recommendation systems, leading to increased time spent on Facebook and Instagram. Early progress is seen in AI video editing tools. 3. Business messaging. The company is seeing product-market fit for business AI agents and integrating them into ads and e-commerce. 4. Meta AI. Now reaching over 1 billion monthly active users, the focus is on deepening engagement and making Meta AI the leading personal AI. 5. AI devices. Ray-Ban Meta glasses are seeing accelerating sales, with new performance-oriented models like the Oakley Meta HSTN launching. Zuckerberg believes AI glasses will be the primary way to integrate superintelligence into daily life. Reality Labs. He noted continued growth in the Quest ecosystem and strong interest in cloud gaming and broader use cases. More updates on Reality Labs are expected to Connect on September 17th. Susan Lee, CFO, provided a detailed financial breakdown and outlook. Financial performance. She reiterated the strong revenue and profit figures, detailing the drivers behind expense growth and segment performance. Business outlook. Revenue. For Q3 2025, Meta expects total revenue to be between $47.5 billion and $50.5 billion, assuming a 1% foreign currency tailwind. For Q4 2025, year-over-year growth is expected to be slower than Q3 due to lapping a strong Q4 2024. Expenses. Full year 2025 total expenses are projected to be between $114 billion and $118 billion, reflecting 20 to 24% year-over-year growth. 2026 expense outlook. Lee anticipates meaningful upward pressure on 2026 total expense growth, with infrastructure costs, driven by depreciation and operating costs, and employee compensation, for AI talent, being the largest drivers. The 2026 expense growth rate is expected to be higher than 2025. Capital expenditures. 2025 CapEx is expected to be in the range of $66 billion to $72 billion, an increase of approximately $30 billion year-over-year at the midpoint. A similarly significant dollar growth in CapEx is expected in 2026 to support AI efforts. Capital allocation. Meta's primary focus is investing back into the business, particularly in infrastructure and talent. They are exploring partnerships for data center development to co-develop and potentially attract external financing. Regulatory risks. Lee highlighted ongoing monitoring of the regulatory landscape, especially in the EU, and noted that modifications to their less personalized ads offering could significantly impact European revenue as early as this quarter. Key takeaways and future outlook. AI investment. Meta is making massive investments in AI, both in talent and compute, viewing it as critical for future growth and for achieving superintelligence. These investments are expected to drive significant expense and CapEx growth in 2026. Core business strength. The family of apps continues to demonstrate strong engagement and monetization, benefiting from AI-driven improvements in recommendation systems and ad performance. Generative AI monetization. While generative AI is in its early stages, the company is optimistic about future monetization opportunities, believing they align well with their current business and will lead to substantial markets. Glasses as a future form factor. Meta sees AI glasses as a fundamental form factor for interacting with AI throughout the day, with significant potential to blend the physical and digital realms. Open source strategy. Meta intends to continue open sourcing some AI models while retaining others, particularly very large or safety-sensitive ones, maintaining its leadership in this area. Financing infrastructure. While a large share of CapEx will be self-financed, Meta is exploring partnerships for data centers to leverage external financing. Return on investment. The company is confident in the ROI of its AI investments in core AI, while generative AI monetization is expected to be a longer-term play. In summary, Meta delivered a strong second quarter, driven by robust engagement and AI-powered improvements across its platforms. The company is aggressively investing in AI to build for the future, anticipating significant growth opportunities, even as it navigates ongoing regulatory scrutiny.